Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's take a look again on the gold market. We as usual have prepared the fundamental report. By my opinion, the report is appeared to be interesting, although there's some really extended part of it dedicated to politics, but we expressed this political opinion in some light way, so it's easy to read, and actually it just explains why the situation stands so that we think the gold market has a good chance to proceed the rally, and why we think that the retracement that now is standing on the market might be shorter and not as deep as everybody thinks. At least if you compare it to the periods of the previous retracements on the gold market. So I hope that you will enjoy to read it. Unfortunately, speaking about some politics issues currently is necessary. I would avoid it, but that really explains our position on the gold market, and that will let you to understand the overall environment where the global political situation stands and why it could explode in any time, which will be really very supportive for the gold market. So our economy actually steps right now on the back, and markets, especially gold market, currently might be driven by the politics. It's already driven by the politics. So returning back to the technical moments, first of all, take a look what's going on a very long-term chart. This is yearly chart of the gold. And with the retracement that we have currently, we have nothing actually curious, nothing wrong. We warned about this 2 weeks ago when the market first completed the major OP target and then touched yearly pivot resistance 1, which stands 29.45 area. We said 28.66, 28.49 is 45 is 29.45. It's actually big resistance area. Since it's accompanied with the overbought on all time frames, starting from the monthly, quarterly, even the quarterly chart is overbought, down to weekly and daily, this is really hard rock resistance that suggests the pullback. And if market will fluctuate around it, even touching the 3,000, it will not change the overall background. Because take a look, here's what spike for more than $100. Do you see and suggest that on this chart this is big distance or something break the picture? Absolutely not. If market, even if it will go slightly higher to the 3,000 or even to the 3,080, it still will be around the OP. So that's the major background why we think the retracement might happen. But at the same time, now many traders start speaking about 2000 level, 2020 level, which they might think that if really big relief in global politics happens, as gold market could show the big retracement. But we think the opposite. We think that yes, it's some easing, market could stand in there at 250 and 3000, 2050 of course, here and between the 3000, but we do not see that the overall situation is moving in this direction. So currently I'm closer to the conclusion that we will get some pullback until the uncertainty exists on the market. But the situation is moving in the direction where it will become more complex and tough, which should contract and smooth the overall retracement in the gold and let gold to turn up sooner than it currently is supposed by the other investors. By looking at lower time frames, what we have on the daily chart, everything goes just great. Double repo is working. Here we have the first destination points. Market reached the 28.40 oversold and shows the retracement on Friday. The target of the double repo pattern supposedly around 50% support of the whole thrusting action of the double repo, which is supposedly around 27.65, so somewhere in this area. So what the trading plan we have? If you take a look at the weekly chart, you could see that market shows minor reaction on the OP target here, and for some time ignoring the minor XOP. I'm calling minor just because it's starting some intermediate reaction point to the A with the star showing here. But with some moments it might be reached if, for example, the Zelensky scandal in the White House will get some resonance. Chances for that are not really significant, but we just keep in mind that 340 is also some target exists. Meantime, if you will take a look at the most recent upward action, it seems very small. But in reality, you have 8 bars to the upside, which makes it suitable for the Judd-Napoli directional patterns, such as a Brent by the buy, for example. And this is great combination of the potential buy pattern here on a weekly chart and daily bearish double repo on the daily chart. They combine each other perfectly. There's no contradiction between bearish pattern on the daily and bullish pattern on the weekly chart. This is the specific of the Judd-Napoli technique, so it's no contradiction here. This pattern is just preparing the background for the weekly start and finalizing the retracement and let market to prepare the conditions for the bullish pullback, which will follow probably later. On coming week, we will be focused just on this pattern and on completion by this pattern, its target. Because on the weekly chart, despite that the first action starts, market stands above the 3x3 moving average. I don't have it on this chart, but we do not have the close below it. So it means that any Brent body is not prepared yet. And next week, it might be not prepared, it's just because market stands at the result. So some half of the week probably will take the pullback here in reaction of this level. So correspondingly, the first stage of our plan is to watch for a pullback. We are not interested with taking a long position on the intraday charts with this, although scalp traders could consider it, because by my opinion it might be a really great background for a scalp long position here. I will explain a bit later why. But since on the daily chart we have the bearish context, we have double repo and in general MACD stands bearish, we will be focused on taking the short position after the pullback will happen, and focused on the possible next target by the double repo below. This is the major object for now. By taking a look on the lower time frames, on the 4 time frame chart, take a look, our extension has reached perfectly. So here we do not need it anymore, probably. Market stands around the support, and we are watching for the bounce. On the hourly chart, you could see what the bounce could reach, what the levels. My preferable level is 28.80 on average. First, this is confluence, and if you take a look at close view, you can see that this also coincides with the previous lows. So it might be a really great resistance area that is perfect to consider taking the short position. But the bounce could start not from this point, although it seems that might be right from here, but from the XOP. XOP has not been completed yet. It stands 28.20. Why I prefer to see the pullback from this level? By the 2 reasons. First of all, completion the XOP is absolutely natural. This is what market needs to do and should to do. But also, if you take a look at the fib levels, you will see that on a daily we have 28.17 or almost 18 area, accompanied with the oversold. On the 4 time frame chart, in the same point, we have 28.16. So we have daily confluence support agrees with the XOP and daily oversold. That's the reason that I'm talked about speaking about the scalp long position for those who are interested with that. If you would like to take the long position earlier, not waiting for the XOP, it would be better to place the initial stop below 28.15 area, just because market somehow might just show some attempt to complete the XOP area and not be washed out occasionally from the profitable position. So that and towards what we have for scalp traders, you could consider long position from the 28.15, 28.20 area with the stops below this area, with the potential target. Well, I hope that will be 28.80, but depending on what the shape will be of the retracement, maybe market will show just minor pullback to the 28.66 or somewhere. Just look at the extensions, calculate the ABCD targets and so on. Probably your target will be somewhere around the confidence levels or other few levels around it. Our primary plan is to watch and wait for this pullback and consider chance for a short entry. For now, it's supposedly around 28.80, 28.85, but with more precision, we could say it later when we will see what the shape will be of the pullback here.